The Bitcoin halving is approaching fast. You might have been sleeping on cryptos. You might not have bought cryptos and Bitcoin when it was trading at $16,000 a coin last year. However, don't sleep on the Bitcoin halving. It is the big moment that could potentially propel Bitcoin towards $250,000 per coin. So who am I? Well, my name is Alejandro Zambrano and I represent ThinkMarkets. And I've been following cryptos for many years. I started already in 2017. I traded at the very end of the bull market and still managed to do some 200% of my capital. I then traded on the COVID-infused bull push and made some substantial amount of money. And I got involved again in November of last year and has so far done 5 times my invested capital. And I'm super excited about the Bitcoin halving because there are certain models out there that suggest that crypto prices and Bitcoin in particular can reach $250,000 per coin. So that's what we're going to talk about today. We're going to start a bit about what the Bitcoin halving is all about, and then we're going to look at some charts and try to prepare some trades. So stay with me all the way until the end. So what is the Bitcoin halving? In the traditional banking system, we have the banks that would validate transactions. In the blockchain and on Bitcoin, we have the miners. So they make sure that all transactions are processed smoothly. And in 2009, they were paid 50 Bitcoins for doing this. And then in 2012, it dropped to 25. And it's been continuously dropping. And since 2020, been paid 6.25 Bitcoin for validating a block. Now, this is anticipated to drop to 3.12. The drop in reward drops every 210,000 block. And that's anticipated to happen potentially already in 7 days, if not in a few days later on April 22nd. It really depends on how many blocks are being mined. So why is this so important? It's important because we're approaching the maximum total supply of Bitcoins, which is set at 21 million. You cannot print more Bitcoin than this. And that is what makes Bitcoin so interesting. Because if you compare it with your traditional central banks and the dollar and fiat currencies, and they can print unlimited amount of these, something that we saw on the back of COVID-19. So on the back of COVID-19, they lowered interest rates, they printed money, and they literally gave out checks in the US. And they did all of this to stop the economy from collapsing. The problem, though, is that when then the economy started to pick up again, we saw this huge inflation. So we paid for it, but we paid with it via inflation instead of seeing people losing their jobs. And Bitcoin at that time acted as a hedge. So you could have bought Bitcoin, traded it to the upside, and then you would have booked profits on it. You could have also have held onto it, but then you would have needed to endure all these massive swings that we have seen in the market. So the fact that you cannot print unlimited amount of Bitcoins is what is interested for traders and investors. And because of the halving, less of these cryptos are going to be printed out to the market. Because you see, these rewards that they receive, they're printed out of thin air, a bit like dollars, and that is going to come down. So when is this supposed to happen then? Well, the Bitcoin halving is due for April 22nd, but might be as early as April 19th. So we're just talking about less than a week from the time I'm recording this. And why is it interesting? Well, let's take a look at this. So we're looking at a chart and some research from coindesk.com in 2012 and 2013. So this was a year before that Bitcoin halving. Bitcoin gained with 385%, but following the halving, it gained with 8,000%. Think about that. And then the halving was completed and the market started to go down a bit. And then again, sort of 12 months before the halving, we added 142%. And then we added 284% push in the year afterwards. But you can see here how the bull market actually continued for even longer. And then here, just before, this was the COVID-19 induced drop, and then we traded sideways. And sort of 1 year before that, we only gained with 17%. And afterwards, we had that explosive move of 559%. So we had massive bull runs after these events. And sometimes we had them just before. And we're in a very similar situation to what we saw in 2016 and 2017, where the market has been heading up higher. Because remember that Bitcoin was trading at $16,000 per coin last year, and is now trading closer to $65,000, $70,000 per coin. What else? Well, you have some investors that have been around for a long time, and there's a gentleman called Plan B, and he has been publishing his models for many, many years. And I've been tracking him from the last bull market, but you can see his work has been out there way before that. And he's creating stock to flow models. And you can see here his model, how it projects Bitcoin prices going upwards. So here, for example, in 2013, you can see the gray line pushed strongly higher, and then Bitcoin followed and overshot. And then here in 2016, 2017, you had that halving, and the gray line pushed higher, and then Bitcoin prices followed. And here in 2020, the halving kicked in and the gray line pushed upwards, and then Bitcoin prices followed. And you can see here once more how this gray line is anticipated to push higher. And that projection is coming from the halving. So that is embedded here. So what he says, using sort of past correlations, is that the average Bitcoin price could be $532,000 per coin in the 2024 to 2028 cycle. And this is obviously much, much higher. I mean, in my case, if we can go to sort of 250,000, which was said at the beginning of this presentation, then that will be good enough. But according to this estimate, we can go much higher. In fact, if you look here in 2018, the price pushed above that level. And then here in 2017 as well. The only difference now compared with in the past is that there's more institutional money in the market. And that means that the volatility is less than before, because they buy on dips and sell on high at the different banks and the different hedge funds, whatnot. So anticipate less aggressive pushes, but definitely upwards. And it's worked in the past, so could possibly happen again. Now, does it have to happen? Of course not. Maybe we have a situation now where people that wanted to buy, like myself, like we bought in November. So maybe more of those people might say, hey, I already done like 6x my capital. I want to book profits now. And some people probably are doing that right now. But with the help of charts, we can actually limit our downside while keeping the upside uncapped. And that's what we're going to look at in just a minute or two. But before we dive into that, do remember that past performance is no guarantee of future results. But again, what if? Well, that's the interesting bit, right? What if? If we can limit our downside, then why not give it a shot? But if you don't have anyone to trade cryptos with, you can trade that directly via ThinkMarkets. They offer all the big cryptocurrencies. And the benefit here is that you will be trading with a regulated broker. So there's no risk of your money disappearing just because your exchange has been hacked. With that said, let's take a look at some charts. So you're looking here at Bitcoin in a 12-hour chart, and you can see that price was trading in a wedge pattern. And the way to trade this pattern is that when we trade and break above that downward trending trend line, we will turn bullish. And on the break here, we could potentially reach 84,551. We get this target by measuring the difference between these 2 points and then add them. Now, I wouldn't necessarily look specifically at the trend line. I would rather look at the high, which is at $72,847 per coin. There's also alternatives, because you see, there's quite a lot of people that have been buying and bought already in November. So we might have a sell-off before or just after the Bitcoin halving. So say it would happen before we have this breakout. If that would happen, it's important to know that an 18% slide like we saw here is rather common in a Bitcoin bull trend. So yes, we might be trading close to 60K per coin again. And in worst case, in the bull market, we could trade down by 30%. If we drop much lower than 30%, then that means the bull market is usually over by that time. With that said, some people that want to buy dips, they're probably looking to buy dips at sort of 60K with stop losses just below 50, because then they're just risking to lose those $10,000 per coin, and they're literally limiting their downside. And then if the market indeed goes higher, they would stand to benefit from that. What's also interesting here is that the break to this level here, yes, it might take you up to $84,000 per coin, but remember about the models we just spoke about. They say we can go up to $500K per coin, or my lower estimate, which is $250,000 per coin. And something as well to bear in mind is that when we're trading at $84,000 per coin, then the most next natural resistance level will be $100,000 per coin. And what's going to happen is that people are going to try to buy it to push it towards that level. So this is Bitcoin, and it's sort of the chart you just have to keep an eye on, because when you see moves here, then that's going to influence everything else massively. So for example, even if you wanted to buy like a smaller coin, and we'll talk about some of them in a minute or two, if this is not right, if this is not at least trading sideways or trading upwards, then whatever you buy is not going to work most of the time. Let's take a look at Ethereum. Ethereum is stuck in an ascending triangle pattern, and the price tried to push higher in April but failed to trade above this, and then has been trading sideways below this level. And a break to 3,651 could potentially lift the price towards 4,255. And I get this target by measuring the base of this triangle pattern. Ideally, we see Bitcoin and Ethereum trading higher at the same time. As for buying dips, you can see that Ethereum dropped 25% from its March high all the way down to the low here. And at the same time, Bitcoin dropped with 18%. So when Bitcoin drops, this drops much more. And in terms of dips, I would wait for Bitcoin to come lower before looking to buy any dips in Ethereum. Here we're looking at Shiba and a 6-hour chart. And Shiba is something that can turn really explosive and can push higher. And we're stuck here in a triangle pattern. You can see here that we have these two trend lines converging. And at one point, this just has to break out. That's what the triangle pattern usually says. However, though, it's not the best quality pattern to trade. But it says if we trade above this level here, the highs from April, that we can push substantially higher, maybe up with some 34%. With that said, if you don't have any broker to trade with, check out ThinkMarkets.com. Not only do they offer cryptocurrency CFDs, they also offer very low spreads and very good trading conditions for gold, indices, and currencies. Thanks so much for watching, and don't forget to leave a like and a comment. Thank you, and goodbye.